Hello everyone, this is Matthew Frailey with BreakpointTrades.com. In this video I'm going to do a technical review of the markets, commodities, trading systems, and it is Tuesday, August 27th currently. As you know, the market had a nice little correction from mid-July until August 5th when the market put in that low. That's when the VIX volatility index spiked to 66, indicating extreme fear. That ended up being perfect three-wave ABC pullback in the market. By the way, this is our KISS system for the SPY. We run this on 750 stocks and ETFs. The beauty of the KISS system, it keeps you long in uptrending environments with a protection via smart trailing stop, like having insurance for your portfolio. And you can see after the bottom, the system got back in. The system had exited a few weeks before the bottom, so you were able to get back in earlier or lower prices than where you got out at from the system. Anyway, market's come a long way in the last 3 weeks, pretty much a V move up. Actually, today's a DeMark 13. Smart trailing stops, we got new ones on the SPY and S&P index and a bunch of other things. It's been basically a consolidation this week following the last 3 up weeks. And of course, the big one this week is NVDA. This is, by the way, the NVDA KISS system. You can see the nice trades it's done all year long. Recently went back long, a few days off the bottom. And the current trailing stop, we call that smart trailing stop, is 108.30. That trades up 14%. NVIDIA reports earnings Wednesday, August 28th after the close. This is going to be a big one, guys. As you know, heavily followed in this AI mania. But let's get back to things at hand. Remember, I'm Matthew Frailey, founder of BreakpointTrades.com, founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems such as our SPY and ES mean reversion systems, and of course, our amazing KISS systems. We also have the high performance now, which are doing well. They've been live for about 2 weeks now. Quite a few people are using those. You can see today on just the standard BPT basket, new smart trailing stops on the S&P, SPY, SSO, UPRO. UPRO trades already up 15.7%. And let's go ahead and get started. Again, this is our back-end recorder for our website subscription service. If you're just on YouTube, you should consider subscribing. You get 10 times the content as a subscriber, in addition to access to all of our trade systems notifications. You don't get that on YouTube. You're seeing that after the fact. So definitely consider subscribing. But let's get started here with the recording. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Tuesday, August 27th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Same theme as I always keep. We first discuss the market, some admin comments. We go into the general market analysis. We do a top-down approach on the major indexes. We'll look at a few indicators such as the VIX. We'll look at the bond market. We'll look at a few major sectors. We'll look at US dollar, Japanese yen, crypto, Bitcoin, Ethereum, commodities, precious metals, GDX, and finally we come up with some trade ideas. Again, guys, remember, NVIDIA earnings tomorrow after the close. A lot of anticipation on that one. And as you know, Steve Nelson is in Europe until September 3rd. And we've also, as you know, launched the high-performance KISS systems. By the way, in about a week or so, we are going to lock that KISS systems down. So you can subscribe there. I'm going to give a 20% coupon, KISS20. Again, I'll be doing a separate video update on that, but just giving you a heads up, that will be locked down in about a week or so. Okay. As far as the market, like I said, this is, we've come a long way in the last 3+ weeks since the August 5th low. We had 3 weeks up in a row, V rally. This week's been mostly a consolidation. In fact, the S&P, Nasdaq, and Russell are slightly down this week, while the Dow is slightly up. And let's go ahead and get started with things. First image below, item number 2, this is from the website on the KISS systems. This is just the standard KISS systems, the daily ones. Remember, we have weekly. We also have the new high performance beta. You can add in your phone number for SMS. You won't receive text messages unless you set favorites. Already discussed that. But today you can see a lot of new smart trailing stops, particularly on some of these indexes. SSO, SPY, S&P 500 cash, the Dow, Google, all nice gains here. Remember, we have the high performance beta. You can go there, you can add your phone number, start receiving messages from that if you haven't done so. Okay. Otherwise, KISS systems we've had these live, the standard ones, for the last about 18 months now. Next, image number 3, here's the SPY daily standard KISS system. Again, there was actually a new smart trailing stop today, jumped up from 533 to 540. So there's been 4 smart trailing stops since the system went back long, right there, about 4 days off the lows. One thing to note, we have a DeMark 13 today. We have it on the S&P and the triple Qs. Next, chart 4. Here's the high performance systems. You can see tons of these. We got over 20 of these, and you can see currently what's up, what's down in the previous trades. Been very active. Some of these have been sending anywhere from a few to a dozen or more text messages a day. So it's pretty active if you have all of them favorited. My suggestion is go there, set some favorites. Maybe you don't want to set everything as a favorite. You may be a little overwhelming. Pick a handful of things that you're following. But pretty cool service here. Also, guys, just letting you know, on the high quality dividend table, I added a new one today, GGN. It typically pays a dividend in the middle of the month. It pays about an 8.5% annual dividend. It pays monthly. It's a closed-end fund that invests primarily in gold and natural resources. Okay, so I like a lot of these monthly paying dividends. They're good for cash flow. And again, my suggestion with these dividend plays, and remember, I'm not a financial advisor, would be don't just pick the highest one or ones. All right. If you're going to play these, it's good to probably do a basket of them. Diversification. Pick 5 of them, 6 of them, 8 of them, and spread your money out. Just don't pick OXCO that has a 20.8% annual dividend. Yeah, it's been very reliable. It's been pretty good, but I wouldn't put all your eggs in one basket. Spread it around. But these are a nice option for folks, and they could always, be a portion of your portfolio. Maybe most of your portfolio you're doing individual trades, or you have it in the S&P 500 and the Nasdaq, like a 401k. But certainly these could be a portion of your portfolio. I know plenty of people make a living just on monthly and quarterly dividends. If you have enough capital, you could do very well. So nice resource. Again, I have a link to this right on the website in our education section, and of course there's a link to the live spreadsheet, Google spreadsheet, in the table of contents. Image number 6. So here's that GGN, the one I added today. You can see it's been very strong. You can see it's very reliable, pays monthly. So typically the middle of the month. It actually just paid here a couple weeks ago. So the next dividend will be in mid-September. All right. But again, this is the new one I added to that list today. All right, moving back to the general market newsletter. So image number 7 shows the index sector table, what transpired today and this week. You can see today, slight update for the major indexes, very slight though. And for the Russell was down 0.8%. And for the week, most of the indexes are down, save for the Dow. It's been, again, mostly a consolidation week following the last 3 weeks that were strongly up after that August 5th bottom. So not surprised to see some consolidation here. We've come a long way. As far as the market sectors, the 21 sectors here, kind of a 50-50 mixture of up and down. No big moves here, as you can imagine, because, markets been fairly narrow range this week. You can see, in fact, almost all the moves here in the sectors are less than 1%. Biggest one was semiconductors up 1.1%. But everything else here, well, home builders down 2.25%. But everything else, quite small moves. And you can see what's transpired for the week. US dollar continues to work lower, down 0.3% today. Slightly down for the week. As you know, it's been taken to the woodshed. Bitcoin down today 1.6%, down 3.8% for the week. Ethereum down 6% for the week. Stalled at resistance. I'll talk about that when we get to that section further below. Commodities, DBC down today, 0.5%. A lot of that predicated on crude oil, which was down 2.5%. It's still up almost 1% for the week. Natural gas down 2.1%, 4.4% for the week. Strength here, though, in copper, uranium, agriculture, corn, wheat, coffee, all these other commodities were up. And the precious metals today was a consolidation. Gold and silver both down about 0.1%. GDX, the miners, flat. And as far as the bond market, so far this week we've seen a little bounce back in the 10-year, 30-year Treasury yield. Next, item number 8 shows the economic news calendar. Tomorrow is Wednesday, so we have MBA mortgage applications, crude inventories, retail inventories, wholesale inventories. Scratch that. That's Thursday. That's when you have initial jobless claims. So no, I was right. So the 28th here, crude inventories, MBA mortgages, that's it. So not a lot of news on the docket for tomorrow. And let's go ahead and get started with the charts. So first chart, item number 9 is NVDA. Remember, NVIDIA earnings tomorrow after the close. It's still stuck in between the supply and demand zone. Kind of still has a bull flag look to it. If we get a pop on earnings, filling that supply would be a target. But again, anything goes in earnings, guys. NVIDIA is going to be so widely anticipated. This thing could potentially gap big up or down. It could gap up over the supply, go to a new high. It could gap down to the demand zone. We'll see. But right now, it kind of has a bull flag into the 9 EMA here for now. Beautiful rally out that demand zone from the August 5th bottom that we had drawn ahead of time. Next, number 10, here's the chart with the 5 key major indexes, the Dow, S&P, Nasdaq, Russell. Again, still, all these are still holding their 9 EMAs. Nasdaq here has been a little weaker. The Dow's been a little stronger lately. And moving to the individual indexes, here's the Dow Jones. Again, slight update today, or essentially flat. You could see yesterday perfectly tagged the July highs, kind of like a double top. Both hit 41,400. So is this just a temporary pause and then we break out eventually, or is that a true double top? We'll see. But it's come a long way, V move, but textbook ABC 3-wave pullback right into that support in early August. That was the area to go long. This is the area now. Would have been to take some profits at that double top. Chart number 12, here's the weekly S&P, which, like I said, down 0.2% for the week, consolidation week. We're into this resistance zone, so not surprising. Remember, beautiful rally off that demand zone from the August 5th lows. Chart number 13, here's the daily KISS trend system. So to mark 13 today, just be aware of that, guys. Doesn't mean we sell off here, but it's interesting. Since May, we had 3 DeMark 13s, and all those led to pullbacks. Some of them were small, like the one here in June. Obviously, the one in July produced that nice big 3-wave ABC pullback. But we do have a DeMark 13 there to be aware of. Chart number 14, here's the 4 time frames. Daily up here, like I said, we have DeMark 9, 13. We have the A indicator, or that amateur buying. Next, image number 14. Here's the 4 time frames with our indicators. So the daily upper left. Remember, we have the DeMark 9 there. We have a bunch of these A's. And we've had this resistance cycle. So price has definitely been stalling at that resistance cycle, which showed up last Wednesday or last Thursday. So now we'll see, do we get another pullback here closer to the ATR, or can we pop to a new high? We'll see. We're still holding the ATR on the half day. We're still holding the ATR on 130 minute. Chart number 15, here's the simple daily S&P chart. Again, clean chart. No reason to make this overcomplicated. Remember, we had that perfect 3-wave ABC pullback from the mid-July highs. Didn't quite tag the 200-day moving average, and we've had this V move up. The new highs, new all-time highs, are just a stone throw away. The highs in July, 56.69, 56.70. Not too far away, just overhead. The 9 EMAs below. There's also an open gap below the 50-day moving average, which would be pretty big support areas should we get a nice pullback first. Chart 16, here's the daily view as well, just zoomed in. Remember, we filled that gap last week. That was a small magnet. We do have that all-time high just above. We're still holding the 9 EMA. Again, we'll see how the market now reacts to NVIDIA earnings. Chart 17, here's a half-day chart. This just shows you that wave count breakdown. ABC pullback into August 5th. This move we've been working on, this wave 5 of 3. Whenever this is finally complete, I'm looking for that wave 4 pullback, then another move up in 5. So this week we've just simply been consolidating. Chart 18, here's a 60-minute view. Shows you the same thing. But one thing I'm wondering, guys, is if this was a wave, you can clearly see the wave 1, 2 from the August 5th low, 1, 2, and then this big move here is clearly a wave 3. Remember, wave 3s are your trending powerful waves. But I'm wondering if instead of being shifted over here, the wave 3 was here, and this is wedging. We'll look at a leading diagonal. A, B, C, D. We get one more pop and an E, and then this completes a little 5. Then we pull down. We'll see. There's a demand zone down into here. It goes down to 55.50. There's obviously the open gap below. But something to consider. Chart 19, here's the 2-hour view. Shows you the same thing. This potential little wedge that's forming, kind of leading diagonal. You can see your demand zones below. Chart 20, here's a 30-minute chart. Shows you the same thing. The demand zone, which we've held this week. And we're kind of wedging here at the moment. And chart 21, here's the 15-minute chart, shows you the same thing, the kind of wedge pattern, your support zone here. So we'll see how this reacts tomorrow after NVIDIA. Next, chart 22, here's SPXU. Remember, that's the triple inverse ETF, so if you're looking for a hedge. And this does have a bottoming look to it. You can see the inverse, kind of a wedge here forming. It may need to pull back in the wedge. You do have this MACD divergence. But it is something to be aware of, guys, or especially if you have a bunch of longs that you don't want to sell but you want to hedge them. This could be an instrument for you. Chart 23, here's the 60-minute view of SPXU. And again, you can see that little base wedge forming. So this could easily pop out of here. Again, we'll see what happens tomorrow. Clearly, NVIDIA is the big important thing. Moving on, chart 24, here's the triple Q's weekly chart. Like I said, so far, a little doji candlestick this week, consolidation following those 3 big up weeks in a row. Not surprised to see some consolidation. Chart 25, here's the KISS trend system. Like I said, this actually to me looks slightly better than the S&P just on this pullback here. It's kind of wedging on some lower time frames, which I'll show you in a minute, but you can see a nice pullback from that to Mark 9. Smart trailing stop still quite a bit below, so plenty of wiggle room there. Chart 26, here's the 4 time frames. Daily up here. We've pulled back from that resistance cycle from last Thursday, just like on the S&P. We're still holding the ATR on the half day. And on the 130 minute, I talked about this 3 color change yesterday on Monday. Well, we got a green here, so that could technically be an ABC complete. We'll see. And we've bounced from the cycle support on the 78 minute. Next, chart 27, here's the daily. So you can see, like I said, kind of a little wedge look here. Obviously, NVIDIA earnings tomorrow are going to be a big catalyst. This could gap way out of this the following day, or it could go down. Either way, you got a gap below, further demand zone should we get a move down. And of course, on a move up, this area would be your first resistance. There's an open gap above. Chart 28, here's a 2-hour view. Again, one way to look at this would be a wave 1, 2. That big move there was a trending wave 3. You can see it stalled in that supply zone. And this could be a wave 4. The positive here is you have 3 waves down, A, B, C. So that possibly completed a wave 4. But we'll see. Chart 29, here's a 2-hour view, shows you that potential wave 4 wedge-like pattern. And chart 30, here's a 60-minute view. Chart 31, IWM small caps. Remember, they got into that supply zone on Monday, and what do you know? Pulling back. Remember, these supply demand zones are areas to take profits or take a position. Like that supply demand zone in early August was a great area to take a shot on the long side. The supply zone was the area to take some profits. Start using these supply and demand zones, guys. They're very powerful. Chart 32, here's the 2-hour view. You can see how it got into that supply zone before pulling back. Now the next demand zone is down into here. That could be a good area to go long again if you're currently not long. All right, guys, that does it for the indexes. Let's go ahead and move on. Chart 33, here's the VIX. VIX was down today, and the S&P was actually flat, so the VIX actually pulled back today pretty much, considering the VIX was, or the S&P was almost flat. Chart 34, here's a 60-minute chart of the VIX. Remember, the VIX rallied off this demand zone over a week ago, and then it's been consolidating since. There was a couple gaps back here that it filled. The VIX loves to fill these gaps, by the way. So we'll see. If the market has a pullback here, I would watch this. This trend line would likely be broken, but if the market rallies up to a new high, maybe this works down back into the demand zone or some of these gaps below. Chart 35, here's an interesting chart. This is the S&P 500 up here, and this is the S&P XLP ratio. The two tend to be very correlated if you look, tend to move together, but lately they're not. Look how much weaker the S&P XLP ratio is versus the S&P, that it's almost back to the highs. So interesting divergence forming. Chart 36, here's the percentage of stocks in the S&P 500 that are above their 20-day moving average. And remember, this got into this overbought territory I showed on the weekend. And so far, we've pulled back a little bit this week. Moving to the bond market, chart 37, TLT 20-year bonds so far down a little bit this week. Remember, over a month ago, we broke out of that coil. Chart 38, here's the 10-year treasury yield. Slight bounce today, but basically closing right at the 9 EMA. Little black candle. Chart 39, here's the 10-year weekly. So far, we've had 3-wave pullback, ABC. Okay. That said, there's the demand zone right in here. Also, this 144-week moving average. That's kind of been an important support resistance area as well over time. So if we get any further decline in rates, this is the area to watch for some support at. Okay, but once this is complete, this ABC, I'm looking for a new move higher in rates again, guys. All right, moving on to some sectors. Chart 40, here's real estate. Remember, this broke out of this coil last week. I put this out as a long idea over a week ago. Played out nicely. Real estate's been strong. Chart 41, here's XOK technology. Again, pulled right off that supply zone. Still hanging on to the 9 EMA on a closing basis here. Clearly, NVDA tomorrow is going to be a catalyst either way. Chart 42, semiconductors, same deal. Pulled off that gap resistance, 50-day moving average. Now we'll see how this reacts tomorrow. Chart 43, financials. This area has been strong after stalling a little bit at those previous highs. Remember I said no triple tops? Well, so I wasn't surprised to see it break out. Very strong sector here. Chart 44, XOP, consumer staples. It's been going parabolic here, as you can see. It has been overbought, but no MACD divergence, as I said, but it is getting quite extended. Here's a 2-hour view. You can see some MACD divergence setting up. A little potential wedge. It's not ideal. It may need to flesh out here a little more, but it's something to watch if you're looking for a pullback here, just because it's had such a strong move. Chart 46, utilities, finally pulling back a little bit today. It's been a strong sector. Chart 47, NE, that's that utility stock. Unfortunately, was unable to close above that resistance, pulling back today a little bit. The charts could still play out, but it pulled back off that resistance again. Chart 48, XLE Energy, pulling back here. So far, we've only had 3 moves up off that demand zone. Longer term resistance is the downtrend line. This sector has been consolidation since April. Chart 49, oil services, same deal. So far, a consolidation week. Chart 50, FXI, Japanese yen, or Chinese ETF, still working higher. Remember, beautiful demand zone where it rallied off of a few weeks back. Chart 51, here's yen, that's the triple leveraged ETF. Same deal, nice rally off that big demand zone from a few weeks back. And chart 52, Baba, Alibaba, Chinese name. This is a weekly chart, but you can see it kind of has this bottoming pattern. Broke out of this weekly wedge earlier this year, and it's been trying to base out. Moving average ribbon's really pinched here, so energy is pent up. Moving to commodities, chart 53, DBC, little pullback today. Remember, it had a big double bottom support in early August. Chart 54, here's the weekly view. Perfect rally off that lower trend line of the coil. That was a low risk area to take a shot at a long with a stop just below it. Chart 55, crude oil. Remember, crude oil rallied perfectly off this lower coil support last week. Today, pulling back a little bit right around that 200-day moving average. But otherwise, it's still in the coil. But you can see that demand zone's been defended. Price still out of the supply zone back in April. Again, guys, learn these supply and demand zones. Chart 56, here's the weekly chart showing the weekly coil. Chart 57, here's natural gas. So that wedge played out that I showed in early August, but this pullback's too deep for an inverse head and shoulder pattern. But, you know, it could double bottom here and make another low and then try to bottom. You're going to have a second MACD divergence if this makes another low. Chart 58, copper, up yet again, up another 0.5%. Again, absolute perfect textbook ABC pullback off those May highs. Just absolute textbook. Chart 59, the tradable ETN, CPER, also a nice move. It's just been steady Eddie. I went long this a few weeks back in that demand zone. Just been holding it. Again, it's not a big mover, but it's just been moving up steadily over time, and that's fine with me. I don't need all my holdings to be high beta holdings. Chart 60, here's DBA. Continues to push nicely higher after clearing out that resistance. Chart 61, there's the weekly. I love this potential completed ABC. If that's correct, this should eventually go to new all-time highs. And I really like the monthly charted DBA. You have this monthly bull flag forming. You could see it last time it stalled at the supply zone earlier this year in April. But if it breaks out of here, I think it makes it to these next supply zones. If that happens, guys, that's not going to help inflation at the grocery store for sure. Next. Chart 63, corn. Remember, guys, I've been stalking this for a while. Finally, a nice update today, up 1.25%. So this has been wedging. I've been redrawing the wedge. We still have this nice MACD divergence. I talked about yesterday the volume patterns here could be capitulatory. And we had a tight doji yesterday, so I said with that doji, you had a tight trigger. 1 penny over that doji, which was 718, would have been your buy stop. And if triggered, your immediate stop would have been 1 penny below the low there. Actually, I have that wrong there. Your stop would be 17.01 or 17. Still very tight stop. Anyway, I went long this today. Now, if it eventually breaks this, I will add to the position. Again, this is bottom fishing, but we'll see. That did provide a low risk trigger with a tight stop. And really, guys, that's what trading's about. It's not about always knowing what's going to happen and being correct. It's about identifying important inflection points in the charts, i.e. breakpoints, just like the website, where you can, take a position with a tight stop, but a bigger reward. So good risk reward. That's what it's about. Okay. It's not about winning every trade, stuff like that. It's about picking your spots based on the technicals. Moving on, chart 64, Bitcoin down about 8% this week. Again, I still think this put in a potential fourth wave low several weeks ago, but still pulling back here this week, inside this larger, fourth wave expanding triangle. Chart 65, a couple of the Bitcoin ETFs, IBIT that I'm monitoring, and BITX, that's the leveraged one. Chart 64, Ethereum. Now this one's been weaker. This one rallied into that resistance area. You could see that was previous support, became resistance. This looked much weaker than Bitcoin. You had a three-wave move into there, and then boom, it is sold off strongly since. Next, chart 68, US dollar continues to melt down. It bounced a little bit yesterday, down yet again today. Again, we're now at the lower portion of this support zone. Are we going to get a double bottom bounce here, or are we going to lose it? Again, we are quite stretched. Moving average ribbon's really wide. We do have a little divergence on the RSI, but boy, this has been super weak. Chart 69, there's the weekly view of the dollar. This been in this wave 3 down. Chart 70, here's the Japanese yen. This bull flag continues to play out. Remember, I was bullish on Japanese yen back here in early July. Chart 71, there's the monthly view of Japanese yen ETF. This is the weekly view, I'm sorry. Nice move from the July lows. And chart 72, there's the monthly view. Beautiful wedge, MACD, RSI divergence. You can see so far 2 nice up months in a row. All right, moving to precious metals. Chart 73, gold. Flat today. It's still in this kind of wedge-like pattern. So, trend is still obviously very strong, but the bulls need to get a nice pop here to negate this wedge. Otherwise, this is a wedge-like pattern. Chart 74, GLD, that's the tradable ETF. Chart 75, gold on the weekly. Like I said, for the week, it's up 0.25%. Like I said, I'm still favoring this as some sort of wave 5 of 3. Once this is complete, which could complete here, it could go up for another week or two. Then I'm looking for the completion of this and then a fourth wave pullback. But for now, too early to say when this is complete yet. Chart 76, here's the monthly view of gold. Like I said, we're working on this major wave 3. This has been my preferred wave count. I've had this drawn for a few years now. Now, if we get a pullback, a good pullback, I'm looking for that to be a wave 4. But like I said, guys, the beauty here, if you're bullish on gold, this should work much, much higher over time. Yes, when we finally have a pullback, it could be a few hundred points, wave 4. But that should be a buying opportunity. I'm looking for this to make a new all-time high in a wave 5 eventually. I think gold is going to go to 3,000 plus eventually, guys. I've said that many, many, many times. Chart 77, here's silver. Consolidation day, but again, you had a perfect 3-wave pullback into that previous resistance, became support. So if you're long-term player, there's no reason to sell this. In fact, your swing stop would have been down there at that wave C low. Chart 78, here's the monthly view of silver. So it's recovered. You can see after breaking out of this coil earlier in the year, moved up to the supply zone where it pulled back, and you can see rallied off. It basically back tested that coil trend line early this month where it found support. I am looking for this eventually to test these higher supply zones over time. Chart 79, GDX still hanging around here, right around the 9 EMA. Can we get one more pop here or not? We'll see. Chart 80, here's the 60-minute view, GDX. So for the bullish view short term would be this is a wave 4 consolidation. We're eventually going to move up in a 5, but we need to take out this channel trend line. Chart 81, here's the weekly view of, or the monthly view of gold, or GDX, I'm sorry. Can't talk tonight. Breaking out of this monthly coil. Longer term, I'm targeting the supply zone up here. Some individual names. SA. This was a great trade over a week ago from that cup and handle pattern. It's now consolidating. Given the volume patterns, the light volume on this consolidation looks like a bull flag to the 9 EMA. So this could pop again, guys. Chart 83, FSM. That's another silver stock. Again, textbook ABC 3-wave pullback into the 200-day moving average. We're still holding the broken downtrend line, which is your support. Chart 84, SSRM, one I mentioned on the weekend, but you can see so far this week it's stalled at that upper channel resistance area. And the other one, MAG, it's been on the list since this weekend. This one still looks pretty good. Looks like a little bull flag there setting up. And another one, guys, XAUMF. This is gold money. This is one Steve and I like fundamentally. This has been moving up nicely off that base. All right, moving on to other trade ideas. Chart 87, CB, Chubb. Remember, this broke out from the coil last week, and then it pulled back, and this is just perfect technical analysis, guys. You broke through resistance of a coil, pulled back, back tested the coil trend line, which became support. And then we rallied off of it. So, great example of technical analysis. That broken resistance became support. Chart 88, here's the daily view of that coil. Chart 89, BDN, one from last week that broke out of this cup and handle. Here's another example. Broke out, came back and back tested that previous resistance, became support. Chart 90, Unity, was a nice trigger the previous week, early the previous week. Didn't quite make it to that target. It's pulling back a little bit. Still holding the 9 EMA. Chart 91, CRDF, still in this coil pattern. So, still monitoring to see which way this puppy breaks. Chart 92, CPRI, still hanging around this resistance area, but it looks like a flag. If we can get through here, I think it quickly pops up to that next supply zone. Chart 93, Lift, still has this flag look to it. Needs to take out that 1195 area. Chart 94, YUMC, nice pullback today, but clearly it's establishing that 3450 area is resistance right there. Okay, so still a setup I'm interested in despite today's pullback, unless it pulls back and loses that lower trend line, but still, to me, it looks bullish for now. Chart 95, Lunar, continues pulling back, kind of a flag pattern, but has not triggered. Chart 96, Chewy, still valid setup if it can hold these moving averages. You may want to look for a low risk trigger right here versus waiting for it to take out resistance. Notice you got a nice doji here you could use as a tight trigger and stop. You also have your first moving average ribbon pinch. Chart 97, here's Gurn, up today, testing the downtrend line. I like this pattern. Chart 98, Musa. Here's one I really like from one of our subscribers. He shares a lot of ideas. Absolute textbook ascending triangle here. Looks really good. Chart 99, SLNO. Kind of a coil pattern. Good volume today. One to watch. Chart 100, ATEC. Little bottoming pattern. Resistance up in there. And chart 101, ENR, Energizer Holdings. Now, this had a big gap today on high volume, but I looked at an intraday chart. This could follow through. So I put this as a momentum play over today's highs. May give you a further trade. All right, guys, that'll do it. We'll see what happens tomorrow. Quick check on futures. ES futures are up 8 points, or down 8 points. Nasdaq futures are down 62 points, and gold is up 9 points. All right, have a wonderful evening. Let's see what happens tomorrow, especially with NVIDIA. Take care.